Folks, this live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
What's going on, ladies and gentlemen? How's it going? How you guys doing tonight, this morning, afternoon, wherever you guys are from? Hope you guys are doing well.
Good morning. Good morning. Welcome in.
Welcome. It is a beautiful Wednesday morning here. As always, please drop your location. We'd love to see where you guys are from. From Nigeria. Awesome. Love to see it. Appreciate you guys. You guys already know the drill. We'll wait for a couple people to trickle in, and then we will get started. Have quite a few pairs to go over this morning. Had a lot of great setups play out since the live session on Saturday and the Smart Money Sundays video on Sunday. So,
yeah, guys,
taking advantage of that.
If you guys hopped on Sundays or Saturday's live session or watched Smart Money Sundays, say aye in the chat. Because there was a lot of value and a lot of just free setups given out, week in, week out, really. But beautiful follow through yesterday with news from what we talked about. Jen and Jared, nice. Australia, down under.
Yes. Here we go. We had some people take a look at it. Yeah, if you guys are not able to join in live, obviously we are live every Wednesday at 8 a.m. Eastern and Saturday at 10 a.m. Eastern time. If you're unable to make it, the recordings are always posted to the Trading Net YouTube channel, so be sure to check it out. We've moved our Sunday live session to Saturday, so it gives you an extra day to watch the recording because they are quite long, but it is a lot of value, so highly recommend it. Helps prepare you for the week ahead. A lot of great setups. So definitely recommend taking some time out of your weekend if you're able and marking off those charts as we go through them on the live session.
South Africa. Nate, thanks for US 30. Have you seen it? Yeah.
US 30 tanked. Stock market actually absolutely tanked yesterday. It just missed my overall level. I'll go over it here on the live.
Yeah, that's exactly right. Moved into expected levels, and then news was simply the catalyst, right, to push price in its overall predetermined direction.
Mm-hmm.
So there's no such thing as happenstance in the markets. Everything happens for a reason, which is why everything had been in and around the levels that we were wanting prior to that news event. And so that was just the excuse for the volatility injection. And we teach that in our courses. News really is just the excuse. It's not. I mean, if you think about it, the inflation news was bad. Inflation is getting worse, yet the dollar strengthened. So there's no real correlation there.
Yep. Alrighty, we will get started here in about, let's give it 2 more minutes for people to trickle on in. What are you guys looking at this morning? What pairs? Drop the pairs in the chat. I'll probably be going over a few of them.
I hope to be interviewed by you one day.
GU, yeah, I'll be going over GU today. SPX 500, yeah, I don't really trade that. More of just the Forex based pairs.
Everyone loves their S&P and US 30. Pretty quiet chat today. Come on, guys, wake up. Get your coffee, your juice, your tea, whatever gets you going.
Mm-hmm. CAD Chef's on a tear to the downside right now. I was hoping it would pull back into my supply levels, but just kept on trickling. I don't really see anything on CAD Chef though. USD CAD. Yeah, I'll talk about USD CAD today. All right, perfect, guys. All right, we're going to get started here. I'm sure people will trickle in as we are going, but that is okay. I'm not able to see the chat when I'm sharing screen, so please just save your questions for the end, and I'll be happy to go over those questions at the end. All right, so I'm going to share my screen first, and we'll get going. There we go. Make sure you're able to see this. Everything good?
Yeah.
Okay, perfect. Awesome. So first and foremost, see, this is the reason why news does not matter. When people say, oh, is news coming out? I'm too scared to get into the market. Well, news is just the excuse, just like Aiden said, to push price in its overall intended direction. So when CPI news came out yesterday, we hit our area of interest because we had a lower time frame level of supply in here. Why was this the valid region? Because, well, first and foremost, we are bearish, right? We're making lower lows, lower highs in the market, higher time frame, right? We're on a tear to the downside. I'll just show you. I know it's blurry. I'm just zoomed out so you can see the trend. Lower low, lower high, lower low, lower high, looking for that lower low, right? And so we're looking to take out this prior low to make a lower low. So we're coming into liquidity. We had equal lows in here on a lower time frame. And once we started to pull back, I figured, okay, well, we're probably going to make a new lower low because we never swept higher time frame liquidity first. And we generated equal lows prior to the higher time frame level. So when we started to pull back, I felt as if we needed another drive into the downside. All right. So when we were trading in here, we can see there's an area of supply, not very pretty. We pushed up into it. We pushed back down, made that lower low, pulled back up into that last buying volume before the sell-off, right? It's just market structure, basic supply, okay? So when we scale into a lower time frame, what we'll notice is that once we push up into our overall level of supply and then start to fall, we have a mini pullback, right? Just this green bullish candle. Essentially what this is just a retest of prior demand. So we have demand in here, okay? Because the counter trend says higher high, higher low, higher high, higher low, higher high, higher low. We fail to make a higher high, and then we make that lower low. So now this demand flips to supply, and now we can look to take it off the pullback to go short. And we can see that when we pulled back in here, we never hit the supply level. So we continued to fall all the way back down, right? We finally started to pull back up. We created relatively equal highs. So this just gave me more conviction that we were going to go short, because as we create equal highs, right, liquidity rests above these highs here. We also have our area of supply right above it. So that gives me more conviction that we're going to be pushing up, sweeping that liquidity, mitigating our supply level, and falling. So what happened? Well, exactly what I said. Buy to sell. News came out. CPI data. I think it was 8 a.m. Eastern yesterday, something like that, maybe 8:30. And then we had that rollover. So price mitigated the level, and then news was used as the catalyst to drive the market short in its overall intended direction. So if you know your levels, news should not scare you, right? Because the news is not random. News happens on purpose. It's just that excuse to push price in its overall direction or to do something it was already meant to do, whether that be fill imbalance, mitigate a level, whatever. That's just what the news is intended to do. So we took a trade here. We're looking at continuations to the downside. I don't really see anything upon a pullback. It's just very, very imbalanced right here. So just wanted to share our region that we sent out yesterday to our members. We talked about that over the weekend as well. So if you are on the live session, I spoke of this level. I'm sure Aiden probably touched base upon it on Smart Money Sundays. But that was definitely a very beautiful level. Euro AUD, very similar. We had a buy from our lower time frame level of demand. We're continuing to push up, lower time frame, higher highs and higher lows. Okay, so as we continue to make higher highs and higher lows, we can see the lower time frame plays here. Sell to buy into demand, right? Equal lows, sell to buy. Okay, beautiful, beautiful demand level. We broke counter trend structure. We pulled back into a lower time frame level of demand. We continue with the lower time frame structure here. If I keep scaling in, we will notice that it's just a matter of, understanding where the proper supply and demand levels are. In this case, we're trending up, so we need to be looking at buying at demand. So we can see here that obviously we came into our level. We shifted structure, right? We have broken the counter trend here, made that higher high. We cleared that liquidity. We start to pull back. We run it again. Sell to buy into this demand. Also imbalance as well. Sweeping liquidity, equal lows prior. So sell to buy, just lower time frame stuff. We create this demand as we break out and make a higher high. We pull back into that demand to mitigate it. We go high again, right? Make a higher high. So now we know that we are going to continue to push higher. Because not only did we break the counter trend structure here, but we're respecting all of these levels and we're higher time frame bullish anyways. We pull back into a lower time frame level of demand. Really, this demand was the one that mitigated this demand. So it's just a mitigation train, really. So that's where I wanted to take it off of this trade. We can see here on the hourly time frame. If I just get rid of this box, you'll be able to see this overall level of demand, right? It's unmitigated. Right? These two candles, unmitigated demand, just straight imbalance move after that. Okay. So we make a higher high. It's just, even if you didn't know this was demand, you could just say higher high, higher low, higher high, higher low, higher high, higher low, and just literally pull a fib and just see where it comes into, right? 61, 71 fib, right? Just getting back down into discount, sweeping lower time frame liquidity. Okay. So we had a beautiful entry, happened to be on Friday, and we had an immediate open on Sunday and price started to push up. We pulled back, filled the gap just a little bit, and then now we're rallying back to the upside. So I don't really see anything in terms of re-entries on this at the moment. You may, consider something in here as demand. That could be that pullback for you, and then continuation, because we are still very much bullish. So if you find a setup on Euro AUD, it's probably good for longs. See if you find a long setup, use as an excuse to buy it. But beautiful entry here. GBP AUD, very similar. We had accumulation, higher time frame. Lower time frame, we had more accumulation right in here. Okay. Even on the lower time frame, we had even more accumulation. So the markets are very, very fractal. They did the same thing on every single time frame. So let's look at this. Accumulation, lower time frame, break of structure, pull back, creates the demand, right? We break the counter trend structure. Now we're bullish, lower time frame. So now this becomes the new demand level. But if we zoom out here, what we'll notice is more accumulation, just on a higher time frame. We break out of this counter trend structure. Okay, so where do we pull back into? That lower time frame demand, in which we initially broke out of the lower time frame accumulation in here. That could have been a beautiful entry right there. Okay, so now if we scale out even further, we can see the higher time frame accumulation, as noted here. We broke the counter trend structure on the higher time frame. See, it's the same thing just on any single time frame. That's why there's no particular time frame that is better than the other when it comes down to trading. You have to look at all of them to get an overall perspective. So we break that counter trend structure, we pull back into our demand level, which is right here. And then we take a long. So I said, since we can't close, I expect Sunday market open to immediately push up. That's exactly what happened. We had a big gap. We came down, filled the gap, and then we went long, right? We never even took out Friday's low because we didn't need to, because we already came back down into demand. So there was no point of coming any lower. So if this was going to hold, all we would have to do is have price rise. And that's exactly what it did. So now we are targeting our higher time frame area of supply that mitigated this supply. And we can just see that we're just following this mitigation trade down because we are higher time frame bearish, but we did take a counter trend trade because it looked very good and it met our rules. So we got it off the demand and now we're rising. In terms of the entry, you can look for something like this. If we do come up into this supply and we start to pull back, we could be looking at this as demand, or we can be looking at this demand here. One of these two levels will definitely be good for continuation to the upside. Simply put, higher high, higher low, higher high, higher low somewhere for another higher high. Okay. If we come into this supply level first, I will no longer be looking for buys in here because the higher time frame objective has been met. Now we could potentially see that rollover to make an overall lower low to follow the overall structure. Okay. So we have to understand higher and lower time frame before we can really find where our entries are. So that's GBP AUD. Now GBP Chef. Now this is the one that I'm really liking for continuation short. I was really hoping that we would get back up into our higher time frame level of supply here that we talked about a few times. We have a lot of liquidity, but the market just kept falling. So in order to take advantage of lower time frame setups, it's the same thing. Higher time frame setups, lower time frame setups. If it presents itself, we can continue to buy, or continue to sell in the overall direction based upon, our strategy, liquidity concepts, time and price, all that good stuff. And we don't have to wait for price to get all the way back up here, right? So if you had tunnel vision and you were just so focused on waiting for price to get back all the way back up into here, you'd be waiting such a long time when you probably could take advantage of some trades down in here for just lower time frame continuations. So that's exactly what we're doing now. So I'm not even really looking at this level yet because we're not even near it. But on the lower time frame, since we're continuing to push to the downside, making lower lows and lower highs, we actually have another setup. So this big move that happened with news yesterday, with the CPI news, had a big spike to the upside, and then we made that lower low. We sweeped equal highs and then sweeped this descending liquidity. 1, 2, 3 touches. I'm pretty sure a lot of people were probably selling off the third touch of this trend line here. So we sweep a lot of liquidity, and then we make that lower low, continuing with the overall direction of the market. We have that draw in liquidity here, equal lows. So I am looking for a short position off 1.1139. We can see we had a little bit of a retracement and then that last buy to sell. So that creates this overall level of supply. And it's also an imbalance region of price. So definitely looking for shorts. 1.1139 is our overall level to take short. GBP USD is a little bit tricky. So, dollar has been very strong as of late, and we can just see that the continuation with dollar strength here with this push down on GU. We are still higher time frame bearish. Okay, we are still making lower lows and lower highs. I would not be surprised if we just zoom out on the higher time frame if we made an overall lower low and swept this low. We already swept this low. We can see that was the 2020 COVID low. You can see that just by a few pips in here. If I get rid of this box, I'll show you. Just by a few pips, but we did sweep it. However, I wouldn't be surprised if we actually made a full-on lower low with GU. The dollar is extremely bullish. We continue to push up on the dollar. So XXX shorts. However, I did say that since we did sweep liquidity and we broke counter trend structure to the upside, I wouldn't be surprised if we had a further higher time frame pullback on something like GU, right? And this would be my level in which I would like price to pull back up into 1.1815. We have a lot of imbalance in here. It's just straight selling volume, higher time frame. But in here, we had that buy to sell. This buy to sell happened at 8 a.m. Eastern time on August 26th. So just last month. So about 3 weeks ago. And 8 a.m. Eastern is just about market open for New York session. This is also London and New York changeover. We have that manipulation up, sweep descending liquidity, come into lower time frame supply, and then make that lower low to continue with the overall trend. So I was hoping that price would get back up into this level. We had the news, came out, pushed all the way back down. However, we are still counter trend bullish, as we can see with the counter trend structure break. Right now we're making higher highs and higher lows. So I wouldn't be surprised, since we haven't come up into our level of supply, to react off of our levels of demand either here or here. So we could run, intermediate lows here, come into a lower area of demand down here, and then go long, or just react from where we are reacting now and go long here, because we still have room to go to the upside into this supply. If we are to go short, I think that we probably have to come up into this level. Okay. So this doesn't mean that we are just going to immediately buy counter trend up into this level with the conviction that we think it's going to come up into it. If there's a counter trend buy setup, then we will. But if there's not, obviously we just don't. We be patient. But since we haven't come up into that level, we could see another run up into the upside here. But we have to understand that dollar is very strong, so we could easily see a lower low in the market. Going down to a lower time frame, we can see that we had that reaction from this demand level. And just to understand why this is demand, not only is it market structure, but also, this was the Asian range in here. Okay. All of this was Asian session. During London session open, we had that push up, entice the breakout traders with this candle. Okay. Because we closed above the Asian high. Then we come back down, sweep their stop losses because they're probably placing them right there, and entice the sell traders, or the sell breakout traders, right below the Asian low here with this candle. Then what do? Well, we push right back to the upside, and we continue with the overall trend of the market. So this becomes that interested level for me, this area of demand. We can see we're having that reaction now. We pushed down into it, kind of had a reaction, one last sell to buy, break the counter trend structure, and we can see here on the 15-minute time frame that we could definitely come down into this level of demand and then go long. So that is a potential area of interest for me to take long trades. If not, potentially back down into here, right? Because we spoke of this lower time frame level of demand as well. Ultimately taking it up into 1.1815. All right. But we also have to, again, understand the dollar is very strong. So is there a possibility that we could just continue to make lower lows and lower highs like this? This could just be a big pullback. Since we're overall bearish, this is just an overall pullback in the market for a lower low. Definitely a possibility. So that's why I'm just going to keep my risk very tight. Maybe use 0.25% here and then 0.25% here to, potentially hedge my short positions on other XXX-USD pairs, because I am short on NU and I'm short on AU. So since there is a buy setup on GU, it is, that's not correlating with AU and NU. Could be a good hedge position for my other trades, just in case we do see some dollar weakness come into the market. But even if I lose this trade because of dollar strength, I'm still winning with AU and NU, so it doesn't really matter. All right, so that's GU. That's what I'm looking at. NU, so that was very similar to our AU setup, right? We had relatively equal highs. We ran them during London's or New York session yesterday morning. The news came out, boom, right back to the downside, coming into that same sort of level of lower time frame supply, right? So we had our original entry here, right? If you recall, lower time frame, it's a lot prettier, but this area in here is very interesting because this is the Asian session back August 17th. That was the particular day. So again, right in here, this candle enticed the sellers. And Asian range, breakout shorts, people sell, nope, right back to the upside, hit their stop losses. Entice the buyers because we break the Asian high. Nope, right back to the downside, take their stop losses, come up into supply. So this becomes this huge sell to buy to sell, creates that institutional formation. So that's exactly why I took my position short here at 62485 on August 25th. So just about 3 weeks ago, we came back up into here, had a wick entry. We fell. Where's the counter trend? High, low, failed to make a higher high, lower low. So this becomes our supply. Just continuing with the structure of the market. So price comes back up into that level. We short again. Well, what else does it do? We form liquidity prior to coming up into this level. Equal highs were run, buy to sell into our supply zone. And then we break the counter trend structure here. Higher high, higher low, higher high, higher low. Had that reaction off the demand in here, right? But we failed to make a higher high in the sequence. We fell and made a lower low. So now this becomes our supply level. So we just keep following the mitigation trend. If you know your levels, then you just be patient and wait for them. All right. So we've been waiting for this level for a while because this pullback in here never pushed up into it. But that's okay because I thought of this as, okay, well, we're probably going to create liquidity because that's really what we do. If we have a level of, let's just say, I'm going to create it here, a level of supply, we oftentimes will fail to come up into it initially, push back to the downside, and then start generating liquidity before it buys to sell into our level of supply, sweeping liquidity. Why does it do this all the time? Because the institutions, they have to free up the liquidity in order for them to enter all of their positions short. You know how much volume, you know how much money it took to push price short here? It probably took billions and billions of dollars to do this. So in order to do that, they have to have all the liquidity at this specific region of price in order for them to enter all of their positions. Because again, for every buyer, there has to be a seller and vice versa. So if there's not enough liquidity at this particular price, in and around 616, which is the exact price I called on the live session on Saturday, then they can't place all their contracts here, or there's not enough liquidity for it. So that's why they build up liquidity prior, right? High here, a high here, a high here. They build it up. They go and run it. Now it's freed up, meaning they have all the liquidity. So now they can short with their huge contracts. So they mitigate their supply, come back up, and then we can short from that level. So that's probably why they came up twice, right? We came up here, actually 3 times, 1 touch, 2 touch, then we ran it again for that 3rd touch. They finally got all of their orders into the market, and that's when price just absolutely tanked. Okay, so I don't really see any re-entry on this. I mean, it's just very imbalanced right now. So I'm going to sit on my hands with this, but we are in 1 position, 2 and 3 here still holding because we are very much bearish on NZD USD. USD CAD, very similar. I talked about this a few weeks ago. I'm not going to get into this because it's probably going to confuse you guys. Just because this pullback wasn't a deep enough pullback. We kind of entered in the middle of the range here, meaning all these lower time frame, higher highs and higher lows. We entered really just in the middle of this entire range, about the 50% of it. So it's not very clear in terms of describing why I like this level. I mean, I guess it had something to do with the fact that, lower time frame, we had a level of demand. We pushed into it, swept liquidity, pushed to the upside, failed to make a lower low, and then we broke counter trend structure, made a higher high, sweeping liquidity as well in here, ascending liquidity. So we had 2 levels on the lower time frame. Really just, our last point, this last institutionally sponsored selling volume and the overall selling volume for the higher high, right? So these 2 levels, 1.296, 1.294, and that news was just the catalyst to come into that level, 296, and then push to the upside. So I did get a small position on it, and we are looking for overall higher highs on this, but really nothing to really talk about here on USD CAD. NZD JPY. So this is very interesting. So if you remember from a while ago, I mentioned that on NZD JPY, we were still bullish until we came up into this level of supply. Why is this supply? Well, if we just zoom out, as we were continuing to push up, we were approaching this level of supply here. All right. Higher time frame, this black horizontal line was a higher time frame supply way over to the left, which is why We finally stopped this huge bullish run, failed to make a higher high here, and made that lower low. So that's why this becomes our supply zone. And we have a lot of imbalance in here as well. So as we were coming back up to fill that imbalance, we tapped into that supply and we had a beautiful reaction. So I was looking for buys all the way up into this level. But since we finally hit that objective, and we can see on the lower time frame that we're starting to distribute, we pushed down, we failed to make a higher high here, and we made a lower low. So now we're counter trend bearish after coming into that higher time frame objective. So now I'm looking to take price short now because the confirmation is there. I didn't want to just sell it and place a sell limit there because price could have easily just continued to the upside because it's overall bullish still, right? But the fact that this was the objective higher time frame and we had a reaction from it and we broke a counter trend structure, now I'm looking for shorts. But it doesn't mean that I'm looking for higher time frame shorts because we're still technically lower time frame bullish. Higher high, higher low. Higher high, could see this higher low down into these two regions of demand, which I'll go over in a second, for another, oops, I'm going to zoom out, for another potential higher high. But right now we're reacting off of objective and we broke the counter trend. So now we can be looking for intermediate or intraday or intra-week shorts. So we have these two levels of supply in here. So just mark these off on your chart, 86.43 and then 87.15. Looking for shorts down into liquidity. If we take it from a pure market structure standpoint, I'll just zoom out on the 4-hour time frame. We can see here we swept liquidity in here. Big sell to buy. Okay, coming into our higher time frame level of demand, which we've been talking about for a while. But I've already went over that plenty of times in prior live sessions. But anyways, higher high, higher low, higher high. What do we expect? A higher low. Right, just somewhere deep down into discount. We don't want to be buying in here, right? Because this is not discount. We want to be sweeping all this liquidity, free it up, discount, and then buy it again potentially. So we have relatively equal lows, and then lower time frame, we have two levels of demand, one in here and then one in here that has been unmitigated. We have relatively equal lows right in here as well. So that's what I'm looking for. Shorts down into these two levels for potential longs, and we'll go from there. NZD CAD, as we can see, higher time frame, we're making overall lower lows, lower highs. So if we scale in here, just on the lower time frame structure, right? Because even though we know that we just scale out, this is the higher time frame structure. This is the lower time frame structure. Right? So we want to be playing off the lower time frame as well because we're higher time frame bearish and lower time frame bearish. Okay. So just following the mitigation train here, we sweep liquidity, equal highs, buy to sell, pull back into our level of supply. Boom. Sold it from there, I think last week or 2 weeks ago. We fell, made that lower low. Our last point of supply was here. Pulled back up. Very strong move, law of effort, very strong high, like very strong momentumous push, very weak retracement, slow and steady for another momentumous push like we had. That's what the law of effort states. So we push back up into our level, push back up into it here, pull back, counter trend, high, low, high, low, high, low, high, low, failed to make the higher high, lower low, very strong impulsive move, a lot of imbalance there as well. So now this becomes our supply. So if we can get that pullback back up into that level, I would like to short it again. All right. So that's my level there in NZD CAD. AUD CAD is very similar. We already have 5 positions. I'm still holding some of them. Higher time frame. We had distribution into a region of higher time frame imbalance. We're just continuing with the mitigation train here, guys. I mean, I've talked about this a lot. There was a lower time frame area of supply here. We had ascending liquidity. We, on a lower time frame, we bought to sell, creating that overall lower low. So just continuing with market structure. We pull back up into that sponsored move. We mitigate and we fall. And then on a higher time frame, I think on the 6-hour time frame or something, there's a area of imbalance here. So you can't see it because it's a 4-hour, but on the 6-hour there is, which is exactly why we came back up into that level after creating Yet again, another lower low, just to continue with trend, lower high for another lower low again. That's what we're looking for. So we distributed into that level. So after we broke the counter trend structure to the downside, just pulled back up into where we started distribution and this 4-hour level of supply. So those are my first two positions. This was like 3 Fridays ago. I remember this 3 Fridays ago. That was the 26th. 26. Let's just to make sure I'm not. Yeah, 3 Fridays ago, right in here, 26. So we had that mitigation, and then we broke counter trend structure this way, right? High, low, 2 positions entered, lower low. Initial push to the upside, and then we had our lower time frame last buy to sell in here, which is why I had 2 more positions here and here. So now we're in 4. Again, continuing. Lower low is formed. Pull back into our level of supply. Boom. 5th entry. So now I'm looking for our 6th, because if we're just continuing with trend here, you can see lower low, lower high, lower low, lower high. There's a level of lower time frame supply, and really it's just this big wick in here, buy to sell essentially. So supply. But what do we do prior to coming up into that level? We generate liquidity, equal highs. This high here and this high here. Generate it, buy up into it, take liquidity, mitigate supply, free up liquidity so we can enter our shorts. Boom. Big push to the downside. So now, since we broke the counter trend structure here, this is where I'm looking to take price. Now, I'm not looking to buy. I'm looking to wait for price to get back up into this level, 8915, to then short it off. Very similar to NZD CAD. So just playing off of these institutional concepts, but understanding lower and higher time frame structure gives you such a high probability setup and pretty much high risk to reward trades as well, which is why, within our VIP community, we do have high risk to reward trades along with a high win percentage as well. So we really have the best of both worlds here, because we understand where to get in. So it just produces relatively high risk to rewards, but also understanding institutional liquidity concepts and smart money concepts, coupled that with proper top-down analysis and understanding fully of market structure, we already have an advantage to begin with, because we already know what we're looking for and the exact levels in which price needs to come and mitigate. Okay. Next one, GBP NZD. This is a trade that we already took, but I'll just quickly go over it. So as we can see, we're higher time frame, we're making lower lows and lower highs, right? Lower low, lower high, lower low. Okay. We want a lower high back up into 9.4, and I'll be looking to short it here again. But counter trend, what we did do, just try to make it so it's not blurry for you guys. And we pulled back. We were going to make a lower low, but we stopped. We came into a lower time frame level of demand. I was not expecting it, but we did. We had the reaction, and we broke the counter trend structure in here. Okay. So now we're counter trend bullish. We sweep a lot of liquidity in the process. This low here and these 2 lows. Equal lows, we sweep it, sell to buy. Retail looks at this like, okay, support, broke support, retest. That's why we have this sell candle here. We start to sell off because it's the break and retest. And then nope, right back to the upside, and retail loses again. So this is where now we come into to play here and understand, okay, well, now the counter trend structure is broken. We're forming descending liquidity, giving us, more conviction that we're going to go run that liquidity. We faked out of support here, right? We swept liquidity that, people were buying off this trend line possibly, but structure was broken to the upside. Retail was, if they were not selling upon the break of the support, maybe they sold upon, the pullback and the retest, but then they lost again. So this is where we just get back in where they originally tried to retest and then place their orders here to go long. So that's a different kind of institutional concept. But yeah, this is why we have to understand what retail is doing so we can just do the opposite. Observe the masses and do the opposite is very crucial, not only in trading, but in everything in life. If everyone is doing something, you're probably in your best interest to do the opposite. It really is. So we got in here. We're in very nice profit right now, and then looking to take profit at 1.94 and look for shorts. 2 more. So actually 3 more, because I want to talk about US 30. AUD NZD, we are very much bullish, higher and lower time frame. You can just see that, right? We're just a huge push to the upside. We're coming into our most recent swing point. 1.13. We actually took out 2018 highs, but now we're looking to attack 2017 highs, which happens to line up with 1.13, that psychological level. So if we just zoom into lower time frame, what we'll notice, actually I'll try to go to the 4-hour here. We're making higher highs and higher lows, obviously, right? And institutional concepts, we bought it right here. We had a wick entry. I'm still holding this position, actually. Equal lows, sell to buy, chop, 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 higher high, creates the demand. I bought it here at 1.0990 because there was a level of demand in here. This was also a level in which on a lower time frame, we can see massive sell to buy, equal lows, and then this sell to buy came into another level of demand. So it's just a mitigation trend. This is following institutional concepts with market structure. So we got into this level here, right? We created the higher low, so higher high and higher low, and then we created the higher high. So what's next? A higher low, right? So we're waiting for the pullback. So this was our area of demand. So we didn't get that fill here. And now we're probably looking to attack 1.13. Not to say that we can't come into it now. This could still just be an overall pullback for a higher high. That's definitely a possibility. So if we get a break below my initial level, I will definitely be looking to buy in here again. But since on a lower time frame, if we look, we broke the counter trend structure on the lower time frame. Now the lower time frame demand in here is now valid, right? Because we had equal lows, we sold into it, and then we broke the counter trend structure. We're making lower lows and lower highs the whole time. Boom, boom, boom. Now we broke the counter trend. Now we want to be pulling back to then long. Okay. So this is exactly what we're looking for. After we swept liquidity, we pushed up, we failed to make a lower low. And then this is where we broke the counter trend structure. We made that higher high. Okay. So now it's essentially this is just lower time frame pushes. I would expect an overall run of this liquidity, free it up, sweep liquidity, come into this level of demand, and then go long, right? Up into 1.13. Okay. We're still bullish. So we need to be looking to attack this objective. If we break this and come lower, then it's essentially shifting from this lower time frame setup to more of the higher time frame setup here, right? So that becomes very valid, very much valid as well. So 1 hour time frame demand, if we break it, this is the higher time frame demand in here. We'll look to buy it again. I don't care if I lose this one, because if I win this one, it takes care of my losses and some. All right, so definitely mark off those two levels. Let's call it 1.1155 and then 1.1075. Euro Chef. So had a beautiful trade on Euro Chef. We can just see, are we bullish or bearish, guys? That should be an easy answer. We're very much bearish. Higher time frame. So if we zoom in, we're looking to attack liquidity. We're making lower lows and lower highs. Lower lows, lower highs on a lower time frame, right? But lower lows, lower highs on a higher time frame. So now we're looking to make an overall lower low from this prior lower low. So we're still bearish, right? We haven't really hit objective, quote unquote, yet. Right? We have conviction that if any pullback occurs, we can still be looking for shorts, knowing that we need a higher time frame. We're bearish, and also we probably need to be attacking the prior low to make an overall lower low, and we haven't done that yet. So if we look at what's going on in here, when we initially broke the counter trend structure, right? This is the counter trend. Highs, lows, higher high, and then lower low. We broke that, closed below and sustained below the prior swing point. Okay. So now, this huge buy to sell came into a level of supply sweeping liquidity. So now that just tells us, okay, well, we mitigated a level of supply. We swept equal highs. We broke the counter trend structure here. Now we can be looking to enter short, because now not only are we higher time frame bearish, but since we broke the counter trend bullish move to the downside, we're now higher time frame and lower time frame bearish now. So it just gives us even more conviction there. So we can see that we made a higher high, a higher low. This pushed to the upside. We failed to make a higher high. We made that lower low. So now this becomes that supply. You can just see that with those two green candles, big time supply. We never got the pullback, because if we just look on the 4 hour time frame, we did mitigate this huge 4 hour buy to sell After that lower low was formed, just a very slight pullback to mitigate, also filled some imbalance, and then we just fell and continued with the lower time frame structure. So unfortunately, we didn't get the fill here on our original entry. However, I did mention on Saturday's live that we would be looking at an entry from here, right? Just taking it off of lower time frame structure. Lower low, lower high, we made that lower low. So this is our last point of supply. It's also an imbalance in here. So I was just like, okay, well, I'm going to be looking to take it off of the pullback into this supply level, also sweeps that liquidity right there. So we got the beautiful entry. And then, we were in really good profit right now. But if price came back up into this level, I would consider this just a big expansion, higher time frame retracement, another expansion, just like we had here on NZD or AUD NZD, right? It would just be a higher time frame pullback for a higher time frame expansion, right? So that's, if we understand the higher time frame direction, we now understand, let me just go back here. We now understand that if we break the structure, if we're starting to make higher highs and higher lows, it doesn't mean that we're just going to go long now. It doesn't mean that. It just means we're probably in for a higher time frame pullback, right, into our overall level. Okay, but we can still be taking advantage of lower time frame swings, right? If we get the lower time frame swings, right, we can definitely continue to do that if price doesn't pull back. But if it does, we know that we're going to still be entering here anyways, short. So now, just if we continue with the lower time frame swing points and direction, you can see on a lower time frame that since we mitigated our initial level here, we stopped, created a little mini tiny area of supply, fell, made that lower low, pulled back, lower high, lower low again. So I'm looking at just these two levels, lower time frame, pull back up into the supply zone. Let's call it 9,650 for continuations. If we come up higher, then I would like to sell it from here again. This is, let's say, 97125 and look for shorts. So either way, we should react off of here or here. So we're probably we're going to win at least one of them. But if we lose and we come up into here, I'm then looking to short it again. And then even if we lose these two, this winner right here will definitely take care of the losses, right? Because we're just building confluence and just trading with the most highest probable setup that we can have, trading in the overall direction. So the chances that price blitzes through all three of these levels and goes long is very low, because then that would be a full-on market structure shift. And we don't see that very often, right? Especially if we're very, very bearish, we're not looking and anticipating a higher high. We're not looking to do that. If it happens, then fine. Then our bias shifts, and then the higher time frame direction shifts, and then we'll just have to adjust accordingly. But that's not what we're expecting. We're definitely expecting the continuations, right? Especially because we're coming back down into this prior low here. And this is not a low in the market. If price is going to go long, this is not a low in the market. If we're going to go long, we're probably going to, have some massive shift like that. Liquidity run and then the push up. But that's not even what we're expecting. So we're still expecting downside. So those three levels, what I'm looking at. Last one, US 30. Missed my level by, let's see, how many dollars? $83, which is very small here on US 30. So we were originally looking at this level of supply because the counter trend structure, and I've talked about this a few times, this is demand in here. We came down into demand, had the reaction, failed to make the higher high, we made the lower low because we reacted here off of a prior shift from demand to now supply, right? Taking liquidity here and here because of this huge, massive sponsor candle, buy to sell, so that swept liquidity that came up into supply. It's just following the mitigation trend, guys. It's just understanding when to be patient and where our levels are. I mean, I think I've talked about this when price was trading in here. So this is back in April, and I got in the market here in August. I didn't take a trade, a singular trade, because I don't really trade US 30 at all, like hardly at all. This was the first time I've traded it in probably over a year, right? But I understood that this was the setup. Let's just call it the 22nd of April, entered on the 16th of August. That's like 3 months. So it's just patience, right? Understanding that this is the proper level. Anything in here, I don't really care about because one, I really don't know how US 30 moves. And two, I know I'm just waiting for the higher time frame, right? Lower low, lower high, looking for a lower low. So because we reacted off of this higher time frame level, we came into demand, failed to make a higher high in this counter trend sequence, right? We failed and made that lower low, creating equal lows. So that's just more conviction for shorts because we're looking to, attack liquidity. This was my level, that area of supply. And we can see we just missed it by I think $83, something like that. But oh well, happens sometimes. Now we're looking to attack the lows and then come down into these lows here. Also come down into our higher time frame objective, 29,600, because we haven't tapped into it here. And it's also COVID highs, the 2020 high. It's also, if you just look at it, just almost like a retest of market structure, essentially, to potentially go long. But we'll see. That is all I have for you guys. I'm not sure if Aiden has anything for you. I'll turn it over to him. If he has anything, he can go over it. If you guys have any questions, please feel free to send it in here. And I'll be happy to answer some for you. So hopefully you guys took some value from that, learned something, marked off these levels. You guys do not want to miss these levels in these live sessions. I promise. If you guys are following me on IG, you would see all the levels that were hit just yesterday. I think we had like 5 or 6. It's a beautiful start to this week.
Yeah, and I think Barry said that he said he made 10% yesterday. So that's the beauty of it, guys, is like you don't need to trade every day. And like Nate said, he waited 4 months for US 30. Now, I'm not saying you have to, wait 4 months doing all the trades you take. Obviously, you always take a trade when all of your rules are met. But there's power in quality over quantity. Right? There's a big misconception that every day you sit in front of your charts, you need to be taking a trade, and that's just simply not the case, right? And people oftentimes ask, well, how many trades do you take a week? And it's not where we kind of predetermine or designate a set number of trades that we're going to take. It literally depends on if all my rules are met and I have the layup setup, that I know that works for me time and time again. So that could be twice in 1 week. That could be 10 times in 1 week. I don't care. I will take the layup setups, all the setups that meet my rules, no matter how many present themselves. All right. So please do pay attention to all these levels. I mean, it's every single week. And honestly, just following Smart Money Sundays and the live sessions on the weekends can put you in a really great position to succeed every single week. Even if you don't necessarily have the kind of background and knowledge, to be able to fully execute on your own. So there's a lot of value, and the idea really is to help you learn or earn while you're learning. And so we really try to incorporate that educational component alongside it for those who are committed and dedicated to learning and not just be dependent on someone else's trades or the levels that they give out, right? But it's certainly beneficial as supplementary, be able to kind of look into our, what we're looking at on a regular basis so you can follow along. So super happy to be able to provide that for you guys every week.
Yep. It also has come to my attention as of late, guys, that I may be giving out a little too much than I probably should, especially, because I have our mentorship group. So I'm not sure if I may have to dial it back here on these live sessions. I'm still going to provide you guys with value, but I do have to respect the value that I bring to our VIP community. So we'll have to see in that regard. So, guys, if you're interested in really taking your trading to a whole new level, like a whole new level, and I'm not even joking, and you want to actually learn this and not be dependent on the analysis, because I promise you, we're not going to be here forever. We're not going to be doing this forever. So at the end of the day, I highly recommend you learn it yourself so you have it for the rest of your life. And yes, it is a process to learn. It does take time. But just imagine that day, maybe 6, 12 months, 18 months from now, which is only like a year and a half, not even that long, that you can say you're financially free because of trading, because you've put in the work and you understand, and you had that mentor. It doesn't even have to be us, but you had that mentor to help you through all the hardships, to help you through the tough times, and to help you understand and get you to the level in which they were at. Definitely beats a 9-to-5 job, in my opinion. So
Yeah, and it's just a matter of being, putting things in perspective. And I feel like I'm beating a dead horse, and I say this all the time, but people are willing to work for, or to go to school to learn for the first 20 years of their life, or whatever, 20, 25, even some people will go to medical school, or post grad school, and spend literally a quarter to a third of their life in the schooling system before they even start making money. So why are people not willing to put in a couple of years of work in this industry to learn how to do this, to make money? Right? Because it's an instant gratification factor that we've all been programmed as children, right? And even worse now with technology and our phones and everything else, is we as human beings really crave that instant gratification and don't have the ability to kind of step back and really put things into ultimate perspective. So just put in a couple years worth of work, and don't compare yourself to other people. Some people might learn this within 6 months and be successful. Others might take longer, but still, in the grand scheme of things, relative to what most people do and what we've been programmed to do, that is school and get a job, it really is a very short period of time, even if it takes a couple of years for you to master something that will set you free, right? And so where you won't be tied down to a job, and you can be making money from anywhere you want on your own time. So is that worth it to you to put in a couple of years of work, right? Because Nate and I, we didn't have our breakthrough for a couple of years. We're going on nearly 6 years now. But we struggled. We absolutely struggled. And we've been there, and it sucks, and you want to quit. And, you switch from group to group, from signal service to signal service, from course to course, in hopes that somebody will have that crystal ball to literally take you to that profitability and success 100%. And that's, you have to be able to come to the realization that that can only do so much for you. Absolutely. Mentorship is essential. Like, you have to have a good mentor in anything you do in life if you want to be good at it. Right. But at the end of the day, it's a kind of a 50-50, right? Or a 100-100, right? You have to put in just as much effort. You have to be willing to sacrifice time and other leisurely activities for a couple of years, and be able to sit in front of the charts and watch live price action, right? Watch the concepts unfold right before your eyes, and build that muscle memory and that repetition, to where ultimately you begin avoiding the same subconsciously, avoiding the same mistakes that you had been avoiding. Right. And start repeating the good things that you've been doing. And then you'll ultimately see your breakthrough. Right. So sorry for the rant there. And Nate, can you see my screen? There was just one other setup, and I know we're kind of running low on time. So if you guys have any other pertinent questions or things you're struggling with or anything like that, feel free to drop a quick question in the chat. But anyway, Nate, you said you could see my screen?
Yeah.
Awesome. So yeah, the only other kind of setup I was looking at was GBP CAD that Nate didn't go over. Everything else that I'm looking at, Nate talked about. Now, this is one that we did talk about on the live session and on Smart Money Sundays. And if you watch Smart Money Sundays, you would know this was my initial kind of primary point of interest, that we did see that reaction from yesterday, and up a decent amount. And obviously we have a pretty clean pool of liquidity resting beneath these equal lows that I still will, believe will be the draw on liquidity, and hopefully took some partial profits here but ultimately this setup broke even. And you'll recall that I still designated this area as our kind of extreme POI. And the way I'm kind of looking at this at the moment, and I've been talking, I wanted this level a couple of weeks ago on Smart Money Sundays. We just came so close, didn't quite tap into it. I'm viewing this now, obviously, as induced liquidity. But we had this up close candle on the 3-hour trading up into supply, running out descending liquidity here. You can see it better kind of on the lower time frames. But really running out this kind of consolidation. You can see this block of consolidation, that buy to sell imbalance move. And we had this pretty clean inefficiency created here on the hourly time frame. Right, you can see between these two wicks, right, and this inefficiency created within an up close sponsored candle higher time frame. And so kind of stepping back, I can also look at this as somewhat of a retail inverse head and shoulders, right? Kind of looking at this as the left, right, the head, and then the right shoulder, and then that kind of breakout of the neckline, right, trading up into supply, tricking all those retail traders into thinking we're breaking out, looking to take it on the retest, and in reality, we have equal lows that need to be destroyed. All right, and so I don't think it's quite ready yet. I think we'll still pop higher. Obviously that full inefficiency fill would be ideal, right? This full fill in here, 50% really is all that's needed. We have tapped slightly into it now, hence why we're seeing that slight reaction. But I think we can see another push higher, and then you can also kind of take the 50% mean threshold of this up close candle here. Right, the body, that would kind of bring us in and around 5275, right? But ultimately, we still have those equal lows, which still gives me confidence behind looking at these pushes higher as simply excuse to get more of a premium to sell into this pool of liquidity here. All right, so here's the candle to play off of. Let's see if we get something kind of equity market open or towards the latter portion of London session, London closure today. But that's all I'm looking at. GBP CAD right off this level. Make sure you mark that off and pay attention to the lower time frames.
Perfect. Awesome, guys. All right, so I'll answer some questions. I know we have some here in the chat. I've been following your levels and have many pairs with multiple entries. Can you discuss the best way to manage stop losses or take profit portions? Yeah, so this is very important, guys. So just like sorry, hold on. There we go. All right. So entries or take profits and stop losses are just as important as your entries. If you don't have proper stop loss placements or proper take profit placements, it doesn't matter how good you are at entries. You're not going to make the money that you could be making. So there are definitely valid points for take profits and stop losses, and I can just kind of go over a few examples here. So we can see my screen. Cool. So for something like what Aiden just went over, GBP CAD, was it?
Yeah,
perfect. So, and this was another one I forgot to talk about. Yeah, this was one that, and again, this is very similar to something like AUD NZD, right? The lower time frame setups we took, right? Lower time frame, we had a liquidity run, buy to sell. We failed to make the higher high. We had a push up, and then we made that lower low counter trend. We broke the counter trend structure, which was right here, right? That lower low. So we pulled back up, failed to come into this level, created descending liquidity, just as he talked about right here. We pushed back up, mitigated, came a little bit higher into our lower time frame level of supply, and then had that massive shift with the news yesterday. So that was our level. We put stops to break even, took a little bit of partials because we filled the gap. But, unfortunately came back up, hit me break even. Oh, well. But I'm in for my second entry right in here. I had two of them. And I shared this on Saturday's live session. So as he's talking about, we may pull back a little bit further up, may have one more drive into the high before falling. But again, like I said before, like on AUD NZD right in here, right, we had the lower time frame area and then the higher time frame level. So this is just the lower time frame area, just in case we just continue with the lower time frame, structure. But if we have that higher time frame pullback, then we can get in from the higher time frame levels, which is what we're doing now. So sorry, to go over that, but the example I wanted to discuss about that question is, just going to the 3-hour time frame, where do we place our stop losses? Well, it's very important where we're getting our entries. So if we get our entry right here, right, then my stop would go above this high. Why would it be just above the high? Well, if institutions are buying, if they have to buy to sweep liquidity to come into a level of supply, which is exactly where did we sell it? Excuse me. Did we sell it here? Yes, we did, actually. This was a level that was sent to VIP as well, guys. Just so many levels. Because again, descending liquidity, buy to sell, pull back in here, supply, lower low, right? So we pulled back up into that level. Institutions had to buy in order to mitigate, right? To then push price to the downside. So they're buying in here. So if price is going to mitigate, there should be no reason why we would come above this high, because they're not going to push price past where they stopped buying.
Where they sold it.
or exactly right where they sold it too, because that's the whole point of mitigation. They're trying to get out of their buys. They're breaking even on them, which is why we come up to that exact level, which is why we're having the reaction probably. There's no reason to push price higher than this, because that's where they're selling. So that's where we need to be placing our stops. But what's interesting about this, and I'll just go back down to a lower time frame. So we may have examples like this, right? We sweep liquidity, high, low, high, sweep liquidity, come into a lower time frame supply, fall, react off demand in here, push up, fail to make the higher high, lower low. So this becomes our supply level. So now it's not a sponsored candle. I mean, this is the sponsored move, right? But we're playing off of the supply within the sponsored move. Where would you place your or stop losses? Well, for me, I wouldn't place it above that high. I would place it above this high, because technically this is still the range. This is our pullback for that lower low. That was the institutionally sponsored buying volume. Now, if we're just placing trades off of, let's just say, AUD, NZD right in here, right? And there's no real sponsored volume. This is just demand. This is just the failure to make a lower low, and we broke structure, making that higher high, our last point of demand in here. That consolidation, almost accumulation before the expansion after sweeping liquidity. In this case, it's sometimes subjective. I would probably just place stop right below that low there. It doesn't have to be too difficult. It's sometimes relatively self-explanatory. If you're playing off of a sponsor candle and needs to be below or above the high or low, obviously if it's a buy to sell, the stop needs to be above the high. If it's a sell to buy, it needs to be below the low. But if it's like just demand and supply levels, like for instance here, technically if we come back down into here, entry, stop loss, it's tough. You could place it right below the consolidation block, right below the demand, or you can be a little more conservative and just place it below the overall swing low. That would be a pretty hefty stop, and that wouldn't give you the best risk to reward, but it may be necessary, So it just depends. So there's no exact answer as to, okay, you place your stop here every single time. It's just dependent upon the setup. So I guess, hopefully maybe that helps you. In terms of take profits, this is, again, sort of subjective as well. For instance, if I'm going to be buying here, let's say price does something like this, right? We come into this level, we maybe break counter trend structure. At that point, maybe I would look to take some partials. Or maybe if I'm up at least like a 1 to 2 or 1 to 3 risk to reward, I may look to take some partials. Maybe if there is, I don't know, like for instance, NZD JPY, right? We're looking to sell upon these levels. We would look to, even though this is our higher time frame area, we're reacting off the higher time frame zone now. We could easily make an overall lower low. We could have a huge shift in market direction. And if maybe our take profit somewhere down in here, let's just say, we have to look at areas in which, where could price possibly reverse from? That's where I place my partial profits, right? Because I split up my position so I don't have to manually play or take partials, because I may be sleeping when it hits my first take profit or something. But where is the highest probable chance that if price is going to reverse against your trade, where does it need to come into? So if I'm selling, let's just say my take profit's way down there, okay, I can set my overall take profit down there. but maybe I have partials right here and right here because these are demand levels that price could react from if I get in my shorts for a potential reversal. If price is going to go against me, this is where I would want to be placing my partials. So it's not just, oh, you take partials at 50 pips or 100 pips or 1-to-1 or 1-to-2. Usually you take partials when price has broken structure. So if we're, I don't know, like something like GBP/NZD, like right in here, we had our entry here, most recent structure. Once price broke that, I'll take partials, move stop to break even, right? Because now I know if price comes all the way back down, I've made money, and if it's going to come all the way back down and hit me break even, it's probably just going to continue, right? Because we're overall bearish anyways. So definitely, take partials, move stop to break even, when price makes another swing point or breaks structure. Take partials when price is into levels in which it could potentially reverse from. Just stuff like that. Hopefully that makes sense to you. Maybe I didn't do the best job of explaining it, but yeah, definitely managing stop losses and profits or partials and take profits are so important, just as important as your entries.
Absolutely.
Let's see. What's your IG? It's at Ariel __FX. It's double underscore.
You can probably drop it in the comments.
Yeah, I could do that.
Our YouTube is simply what my name shows here, Ariel Fx. Make sure you guys subscribe. Post a lot of content over there as well.
Yep. There we go. All right, let's see. NDJPY, higher and lower time frame thing. Yeah, I'll go over that very briefly again, because I know that could have been confusing. Yes, been in this for 3 years, still not profitable. Yeah, I mean, sometimes that's the case with some people. It takes longer, but that's probably, you're probably going through that same cycle of, maybe finding a new strategy, not having it work for you, and then moving to a different one. Maybe if that's not the case, maybe it's something psychological. And it's just taking you through that emotional roller coaster. So this is why, I preach mentorship, because all the business owners, entrepreneurs, billionaires, millionaires of the world, they have mentors. They have someone that has taught them through people who have done it before, their experience, to give them pointers as to what they need to be doing going forward. If you do it on your own, great, but it's going to take you a lot longer, in my opinion. Even me, I mean, I can still work my butt off and try to figure this out, which I have, but I also had a mentor to help me along the way. It's definitely very important.
Yep.
Yeah. How do I join your mentorship program? Yeah, just book a free call on our website. We'd love to just talk to you about your goals. We're very client oriented. We're not here to just sell you our courses or our mentorship and then leave you out to dry. I mean, the reason why we have you set up calls is so we can put together an actual personalized plan specifically for your needs. Whatever your goals are, we will direct you in some fashion, a plan within our program to help you reach that specific goal that's, personalized for you. Could you quickly go over what is offered in your mentorship? Yeah, sure. I can talk about it. Usually I save it for the calls, but so, we don't sell our courses individually. We don't sell our mentorship individually. You have to have all of them because it gives you the best possible chance to be successful in this industry. So, people who have taken courses but don't follow that up with proper mentorship, they're going to start to fail, immediately after taking the courses. Failure is a part of the game here. You will fail no matter what after any course you take because you need experience, but you need that coupling of reinforcement and continuous education along with the education to work upon those skills to eventually help you become profitable. So that's why we only have one bundle. We have our 3 courses. So it goes over Wyckoff, goes over our supply and demand and smart money concept strategy. It's not 3 different strategies. It's all one, just 3 different components to it. But then we kind of, after you've taken those courses and have that education, we really want to root you in that understanding, the same understanding that we have. Then we then like to get on a one-on-one call with you. What that will do is essentially, kind of we can divulge deeper into the markets. We're going to have you kind of go over your screen and mark up charts for us, because that will gauge your current level of understanding. Will help That will help us understand where you're currently at in your understanding of our strategy. And then we can take that, develop a plan to help you, learn the material in which you're struggling with, but reinforce the areas in which you're doing well in. And then, obviously we have that VIP program, which we're sending constant analysis all the time, giving you updates, way more in-depth stuff than what we're going over in our live sessions. But that just helps with constant reinforcement on a day-to-day basis.
Live setups, they're not signals, they are setups. And, oftentimes with risk to reward, we don't want to have that signal where, we're, telling you buy this, sell this, or, take partials here, take partials there. All of you have taken the courses and understand how to do it for yourself. It's just that extra kind of reinforcement, right? Here's what I'm looking at. And you can see the setup, you can see the risk to reward tool and be, I learned that in the course. I know what he's looking at. I know how to execute it, or I don't want to execute it. It's completely up to you. But Nate and I post live setups every single day, as well as daily market breakdown videos every single day, kind of going over what happened that day and what we expect to happen in the following session, the following day, right? So kind of that ongoing continuous reinforcement of what you learned in the course, as opposed to just expecting you to take the courses and go out there and be a profitable trader. That's just really not how it works. You need that continuous education and reinforcement to make that muscle memory, right? And build those subconscious habits in order to be successful. So that pretty much sums up the
if you guys have any other questions about it, just send
us. Nate and I, we are in the process of developing our 4th course. It's the psychology course. Going to be super powerful and beneficial for those who are really struggling to manage their emotions and balance fear and greed. I think it's going to provide a lot of breakthroughs. That will be added at the end of the month, and it won't be any additional charge to existing mentorship students, but it will be increasing the overall price for those who join afterwards. So if you want to get involved, just head over to our website and book a free call with either Nate or me, and we will go over more specifics.
Mm-hmm. All right. Yeah, definitely. Yeah, awesome answer. Thanks, really helpful. Yeah, I appreciate it. If you guys have any other questions, feel free to drop them here. To send us a message. Let's see if we have anything else. How much would it cost for everything? That's something we like to discuss on the call. We don't really like to give that out here. Let's see. Oh yeah, NZDJPY. All right, very quickly, I will finish up with going over the question that was asked earlier, and then we'll wrap this live session up. So this is actually really important. So pay attention to this, because this is probably going to answer a lot of your questions regarding market structure. So this is really something that if you pay attention to, it could really help you. So with NZDJPY, we first and foremost have to understand top-down analysis, right? If I just scale out here, I know it's so super blurry, but this is back from 2014 to present day, about 9 years, right? I'm looking at the higher time frame. I don't really care about all this crap to the left unless we're approaching something higher time frame to the left, right? Obviously when we were trading in here, I was looking at more like this as running liquidity. Like we were going to look to continue to buy because, we're bullish, but looking to attack this liquidity. Next, we're up into this region of price. We're continuing to push higher. What's the next objective? Well, now we have to look left to see, okay, well, where could we potentially reverse from, right? Or come into, right? Because we don't want to be buying, but having price already hit an objective. Like, let's just say the objective was like right here and there was something to the left. Well, we don't really want to be buying in here anymore because it already hit the objective. We want to be looking for shorts. That's how a lot of people lose trades, is because they don't understand the objective, or, like some people put it, the narrative of the market. Okay. So if we understand higher and lower time frame objectives, it gives you just that much more of a highly probable chance to succeed with that trade. Right. So we understood that just based upon market structure and institutional concepts, right? If I go all the way back to 2007, before the 2008 crash, this was really the last buying volume before the sell-off. So, you wouldn't have known to sell it there. I mean, I wouldn't have sold it there, but the fact that we came up into it after having this huge bullish run that lasted from 2011 to 2014, right? So like 3-4 years, market structure, we finally came up into that level. We pulled back and we failed to make the higher high. And now we shifted. So we've had that huge run up, that expansion, and now we had that huge run down. So now we're pulling back up into it. We could easily make a higher high. Sure, we could. But if we're going to reverse, this is probably the area in which we're going to do that, because we failed to make that higher high here on the higher time frame, and we broke structure, making that lower low. Whoops. There we go. So this becomes really our last point of return, this supply level, right? Because usually when you're buying, you're in a trend, you're buying off demand, buying off demand, buying off demand, right? But when the demand fails, because it stops and doesn't make a higher high and makes a lower low, that demand then flips to supply, and that's where we can be looking to take it off of. So these demand to supply flips are very, very crucial in understanding where the proper levels are. So having that understanding, right, the higher time frame level that we could potentially reverse from 88, 89, or 90, right, we finally came back up into that level. It doesn't mean I'm just going to sell it there, but we have to be looking for reactions. So this is not only the level in which your take profits would be for buy. So if I was buying in here, I would look to take profit here, because that was the overall objective, because that gives you, or that specific price point or area of interest is a high probable chance that price could see some reaction from, or some sort of reversal. So going back to what I said about the take profits, if you were buying anywhere in here or whatever, you would have taken profit here, because that's a level in which price could potentially reverse from. So you just want to be out of the market, or at least take a majority of the profits off the table. But anyways, once we come up into this level here, we can see we're starting to slow down in momentum, slow down in momentum, slow down. So with just the market structure, we pushed up and we hit the objective. So now we're just watching price. Price makes higher low, and we could have easily made a higher high, right? But we stopped. We failed to make that higher high, and we made the lower low. Had a little bit of a pullback, didn't fill up this imbalance or mitigate this supply, and we made another lower low. So structure has shifted on the lower time frame after hitting the higher time frame objective. So now we can potentially be looking to short, right? We can be shorting from here, or we can be shorting from here. Now, if we look at just the current structure here on the higher time frame, technically, yes, we did come up into an overall objective, but we haven't broken the higher time frame bullish structure yet. We've broken lower time frame structure, but it doesn't mean we've broken higher time frame bullish structure. If we go like this, if we close below this level, then yes, we will probably now be higher time frame bearish now, right? Because we hit the objective and we broke the higher time frame structure. But we only broke lower time frame structure. So yes, we could be looking to sell if there's room to go to the downside, meaning let's look at the higher time frame bullish structure now, just in case we do this, because we could easily make a higher high, right? Just because we have objective doesn't mean it's going to hold. It's just an objective point for the market where price probably should push up into before potentially reversing. Keyword potentially. So it doesn't have to, but it's a potential. But the current structure is very bullish. Higher high, higher low, higher high, higher low. Right? That's what we're looking for. So we have equal lows in here, and we have demand that was formed after the liquidity run. Equal lows, sell to buy, reprice, continue. Come back down, create new demand. That's unmitigated, higher high. That we push down into that demand after sweeping liquidity. So scaling into this level, these are my two areas of demand that I'm looking to take, potentially buy from, to continue with the higher time frame structure. So since we came into objective here and we broke counter trend, I have strong conviction that we can pull back and short, knowing that we haven't come into this level yet, or these two levels. So now there's still more room to go to the downside. There's all this room here. What if we went like this? What if we had a massive push and then we pulled back up into these levels? Would I look to sell? Probably not, because we already hit our objective. And now we're probably looking to go long again. Maybe, right? So shorting into here for potential buys. Okay, so that gives us conviction for shorts. We can potentially buy it here to maintain our structure. If we break and close below this level on the higher time frames, probably the daily or the weekly, then I would expect, pullbacks to short, because market structure, higher time frame has shifted, and we already came into objective as well. So that's how we can kind of read lower and higher time frame market structure in a sense. I go way deeper into the courses on market structure because it's so freaking important. People who fail in trading is either psychology based, mostly psychology based, and then not understanding proper top down analysis. Very, very important. It's what we pride ourselves in.
Yep.
Here at Ariel.
Cool.
Yep.
Appreciate it, Nate.
Yep. All righty, guys. Well, I appreciate your time today. If you have any questions, please feel free to let us know. We'll be happy to help you in any capacity that we can. And yeah, we will talk to you guys all on Saturday morning for our next live session. VIP, we will stay in contact throughout the day, and we'll talk to you guys tomorrow as well. So take care, guys, and we'll speak to you later.
Thanks, everyone. Cheers.
Cheers.